Hey, will SPY go down tomorrow? I like overnight swing trading, so knowing if the market's going to go up or down is rather important to me. So the first thing I do is look at my indicator. My indicator is at spytomorrow.com, and it's free for everyone at 4 o'clock Eastern Standard Time, where it shows either up or down. However, I have a little advantage because on the inside of SPY Tomorrow, I have a probability number, which helps me decide how much of a risk I want to place in my overnight trade. That means you need to ask yourself, what would you do if you knew how the market might open 3 out of 4 times? And you would know that there are times you're going to have winning streaks and there are times you're going to have losing streaks. And how are you going to manage both the wins and the losses? However, with the probability numbers, I know if it's in the 50s, I really just have a 50-50 chance. So I may have a very small trade or not trade at all. If it's above 70 or even actually 80, the 80s are great. Generally, it's in the 80s, 90s, and in some situations, 100% correct, depending on the time frame. Nonetheless, it does work out that overall, it's 75% correct. The higher the pressure and probability, the better chances you have. This helps me position size in a more logical way. If you watched my last video, you would have seen that we had shown that the market tends to open up about 53-54% of the time on average. Obviously more so in bull markets and less so in bear markets. And on average, the market opens down about 47% of the time. One good thing that you can do is watch for trends to determine if the market is going to open down. If the trend is generally down, the market often does open down. But watch for news and events. Make note of how the market reacted in the past. If it generally opens down after a certain event because maybe there is a certain business that's in decline, well, then you know that quite often, especially if it's a market-moving company, that you have a good chance of the market going down the next day. Keep an eye on economic reports. Are there certain economic reports which lately, maybe over the last few months, have pushed the market down because they haven't gone well for the overall sentiment of where the market wants it to go? A couple years ago, I was watching a video of a young man who noticed a trend in the market open. And quite honestly, I noticed that trend, and a lot of people were talking about it. It was a situation where the market would open maybe up or down a little bit, but then immediately drop and then work its way back up. And the market goes through phases like this. So it's not a bad idea to take a look at how the market has been opening. Is it opening up or down and then immediately dropping, or is it starting down and immediately going up? There are different phases, and sometimes they continue for a while, for weeks or even a couple months. So if you see a trend like that, start to play with it. See if you can take advantage of it and predict when the market just might go down. And sometimes that predictable downturn happens at 10 o'clock or even 10:30. Another thing you could do is take a look at the technicals. Is the SPY overbought? Now, the fact is it can be overbought for a number of days more, but you can prepare for it. Maybe put in small position sizes for a few days and let that build up until the market eventually corrects. It's important to note when you trade like this, you must have a plan because basically you're trying to time the market. And so you need to determine how much are you going to risk on this trade and maybe divide it out over 3, 4, or 5 days. And if you hit that 3-day, 4-day, or 5-day mark, just get out so you have money to trade another day. And yes, the market could drop the next day, but it could have kept going up a few more days. You're better off sticking with your plan and having money to trade another day than wishing you had stuck with your plan and totally blowing up your account. If you're an overnight swing trader like me, there are a number of ways you can determine how the market might open the next day. Of course, the trend of the market, or maybe how the market reacts after the close, possibly put to call ratios, and of course, the technicals that we were just talking about before. And quite often, it's a combination of factors or a combination of signals, and it's best to test. And you can back test if you have the data or just test moving forward. So paper trade before you commit real money. It's also important to not chase signals, going from one signal to another signal to another signal. Test signals, find one that you like, and follow it for a while. If it starts to fail on you, then start to test other signals, but jump on the new signal as soon as you know it is working for you. But you can't keep going from signal to signal because you will not learn how to trade those signals well. The key to success in this game is all about managing your account. Your signal may say SPY is going down tomorrow, but what if there's news? What if the mood of the market changes overnight and it goes up? What's your next step? And after the market opens, it's helpful to have a plan to help guide you out of your trades, even if your indicator was correct, because it's quite possible you could extend your gains. So technical indicators such as money flow or VWAP or advanced decline signals can be very helpful and guide you into minimizing losses or maximizing your gains. So if you want to know if SPY is going down tomorrow, well, check out the SPY tomorrow signal or create your own, one that you trust and that you know works best for your style of trading. I'll see you in the next video.